Man, what's the dealio, y'all? Hey, look, check this out. Today, you already know we got another what? Another banger. All right. So, look, man. This is like a little hybrid of like a trade of the day video, but also I want to talk about entries, right? And when do you know that the market is going to come down, right? Or at least for a trade, okay? So we're going to go over that today. I want to go over entries and also bearish candlesticks, okay? These bearish candlesticks, they made me what? I would say like 18% on my money today. And I always say, make sure you understand that we are playing a percentage game. We are not playing a dollar amount game, okay? So I don't want to make this video about how much money I made today. I want to make this video about when should you get into puts, okay? So with that being said, if you're watching this video, be sure to like this video, okay? Subscribe to the channel. We coming with content and information that can change your life every single day, all right? So when we talking about getting into a trade, taking entry on a trade, right? When we're talking about getting entry, so first things first, you want to understand, am I entering in a trade on a put or on a call, okay? And then you got to understand relevance, all right? This is a big thing for me, relevance. Where is the stock at in relevance to where it was at, okay? So today, first off, let's go over the last 3 to 5 days, okay? The last 3 to 5 days. Last week, if you hear a little bit of noise, they building this apartment building, okay? So just bear with me. We almost up out of here. So when I think about today, I was looking at, I figured it would go up and then it would come back down, okay? Now, how did I figure that? How did I know that? And why was that my game plan? So we had 3 days of an intense sell-off, okay? Intense sell-off. And then overnight, what did we do? We had a gap up, okay? So you got to understand the psychology, all right? Don't let them play these games with you. I always say this. Stop letting them play games with you and your money. All right, so we had a bullish day yesterday, right? Stocks closed up yesterday. Today, they opened up higher, okay? So we had a gap up. So gapped up, you know, $2, $5, $8. It just depends on what the stock is, all right? So because we had a bullish day yesterday, and then we gapped up today, and we're in a downtrend, I was like, in my mind, we're going to go up a little bit more. It's going to fake people out, and then we're going to come back down, and we're going to potentially fill those gaps today or tomorrow. Or we might gap down tomorrow. I don't know exactly, but this is what I'm thinking is going to happen. I'm not trying to predict it, but when I'm looking at these things and I'm basing it off of what I've seen happen previously, I'm like, all right, cool. So I wasn't even really looking at calls today. I was looking at rejections from the upside, all right? And the reason why is because of everything that I just told you. Okay, we're going to go in the charts, and I'm going to show y'all the charts as well, but I want to preface this and help you understand what the thought process was of it all. Okay, and then we're going to go into the entries. So then the market opens up. First 30 minutes, we really don't have any real movement, right? Stocks are moving very, very, very slow. So I'm like, all right, this is the games that we playing, so we just going to sit it out. We're going to chill, and we're going to be patient, okay? I hit Apple today. Also, I hit Google today, okay? Apple and Google today is who I made my money with in my day trading account, right? So hit Apple on a rejection / reversal, and then I hit Google on a VWAP rejection, okay? So that's 2 trades that I took in the Discord. We banked on both of those, all right? And it was both on puts, okay? So now I'm going to go to the chart, and I'm going to help you understand the candlesticks that told me when should I enter in to this trade. All right. I will also add, make sure that you know what time frame you are trading off of. So for me, I was trading off the 15-minute time frame, and also I was looking at the 30-minute time frame. All right. I was looking at the 30-minute time frame. I wasn't paying attention to the 1 minute. I wasn't paying attention to the 5 minute, the 15-minute, and the 30-minute. And I executed a lot of patience today because the plays had to develop in order for me to get into the plays, okay? It looked like we could get a reversal earlier than where we did. If I would have got into my play earlier, right? Like if I would have got into Apple earlier, I would have been down 30%, right? And then I would have had to add to my position hoping that it comes down lower. I didn't want to do that. So I had to exude more patience today, okay? And stocks were moving very slow. So they were kind of melting up a little bit, right? They were kind of melting up a little bit and just going slow, so slow. And then I started to see where the rejection was happening from, okay? So we're going to go over Apple first, and then we're going to go look at Google, all right? So let's go. Boom. All right, so this is Shopify. So like I said, the whole market, right? Let's look at the whole market. Understand this. Whole market. Right here, this is where SPY closed at 507. It gapped up and it opened at right here at 521. So it gapped up $13 and then it came up here and then it reversed and now it's all the way down to 512, okay? If you didn't see this coming, then you got to really work on your psychology and understand, right? Because it was clear as day to me. So I wasn't even worried about the calls going to the upside, all right? I just waited for the stock to exhaust and then it started to come down. So this is on the 15-minute time frame, right? So let's go over Apple first. So look at Apple, right? So yesterday, Apple came up, came down, and then it came back up, right? It closed at 181, all right? So look, I'm gonna type all of this in here. So Apple closed yesterday at 181. Okay. All right. So it closed at 181. Now, today it gapped up and it opened at 186. All right. Opened at 186. Okay. So that is a $5 move, right? $5 move. Okay. So it opened up today, and then what happened? It came down a little bit, and then it went up. Now, these two candles, it looks like they were going to the upside, and it was like just straight up. But no, it was going very, very, very slow. It was going excruciatingly slow, okay? And I always say, when you look at this stock, right, when you look at a chart, when you're looking back at the chart, it looks perfect. It's like, oh, I know exactly what happened. But when you don't have any of these candles, right, and it's in real time, sometimes you don't know what to do. And then you got the 15-minute, the 5-minute time frame. All of these time frames be looking different, right? So what I did was I let Apple go up. I didn't get in right here, even though it was rejecting. I didn't get in right here. I waited until confirmation, okay? So this candle right here was confirmation for me. This candle right here on the 15-minute was confirmation for me to enter into my trade. All right? So this is my confirmation candle right here. All right? This was clear as day. I said, oh, we definitely coming down. All right? And the reason why is because it's on a 15-minute. And then look, this is all selling pressure, okay? So what I'm going to do is I'm going to put this all right here, this rectangle, all right? So all this right here, this is all selling pressure, okay? So if you see this right here, if you see a candle like this right here with the big wick to the upside after an uptrend, right, and it comes down like this, we come into the downside. So I entered in my put once this candle closed right here, came up a little bit. I was only down like 5%, right? And then I came down here, right? It came down here. I ended up getting out about right here because at the time, this wick is what took me out. Okay? When this candle opened up and it came back up here, that's when I was like, okay, I think I'm gonna get out. All right. If I would have stayed in, obviously I would have made more money, but I got out at that wick right there. Okay. And I ain't even mad at it. Now, let's say you missed this move. What is another good entry? Another good entry would be at this green candle right here at this VWAP, under the VWAP. Okay. So what I would do, I didn't take the trade, but what I would do is once this candle breaks below this VWAP right here, which is this right here, I would wait until this candle opens up, and then I would see if it's going to come to the VWAP and reject off of it first before I take an entry. All right. So boom, it came up to the EMA right here, and then it rejected off, and you see it came down. Then it came down some more, and then it came down some more. So now we're looking at Apple. Look at Apple right now. Look at where Apple closed at. I said, where did the Apple close at yesterday? It closed at 181, right? It opened at 186. It went all the way up to 189. Right now, Apple is at, it came down right here and it filled the gap. So today, people got faked out. Okay, they thought it was going to keep going up because they just think that things keep going up, not understanding that the stock gapped up and it has to fill that gap. So if you look at this right here, Apple is filling the gap. If you look at Carvana is coming down to fill this gap right here. Okay, if you look at SPY closed here at 504. SPY is coming down right now to fill that gap. Okay, literally. That's exactly what's happening right now. And it's happening with a lot of stocks. If we look at Robinhood, okay, look at it. It closed right here yesterday. Look where it's at. It came down. It went up, gapped up, came down to fill this gap right here. All right. Look at MU. It closed right here. It gapped up, went up, and it came down. And look where it's at. It came down to fill the gap. All right. Now let's go back to my Google play. Google, okay? Something very similar. It closed yesterday at 147.92. It gapped up right here. It came up, started to reverse. I missed the reversal. It broke below the VWAP right here. I got in. Once it closed below the VWAP and it came up to test it, I entered in and then it came down and I made my money on that move right there. All right? This is a VWAP rejection, but this candle right here was bearish. I waited for this candle to open up. It came up, hit the VWAP, and then it ended up coming to the downside. And as you can see, it came down to fill this gap right here. All right. So that's how we get down. It's really that simple. It's really that simple. Okay. So I remember when I was beginning trading, these gap ups and gap downs, they would get me. Sometimes when the stock gaps up, it just takes off. But because we just had 3 days of excruciating selling pressure, I'm not being fazed by a gap up. And what we call this is a dead cat bounce, right? We're in a downtrend, the stocks go up, and then it gets rejected and it comes back down. That's exactly what we call this right here. Now, are stocks going to go down further? I don't know. Are they going to go up? I don't know. I don't know exactly what's going to happen. But what I do know is I knew what my game plan was today, and I played it to the T, and I was able to go into the market and print out profits. That's what I do know. All right? So I want to encourage you guys. This is why I say the more you study, the less you worry. You don't got to be fearful in the market. You got to just understand the game that they playing. I always say this. Understand the game that they playing. And when you understand the game that they playing, you could be efficient with your approach. All right? So I hope that blessed you. I hope that was clear. Okay? So tomorrow, something completely different is going to happen in the market. Don't get faked out. Do not get faked out. Whether we go to the upside or to the downside, we gonna make money because we can make money on calls and we can make money on puts. It don't matter the direction. What matters is your understanding, your execution, your patience, your discipline, and your personal trading psychology. All right? So with that being said, be sure to get up out of your head, go get into this world, because your head is a dangerous place to live. All right? And always remember, the more you study, the less you worry. All right? I'm going to see you guys on the next video. Peace.